record here for a couple people that couldn't make it. Welcome. It's your boy Doc. It's about just after 8 p.m. on Sunday here in New York City. What we're going to talk about tonight are the fundamentals of QTA and some tech analysis. What we're going to expect for the week. There's not much there are some catalysts for sure. We'll go over that. The earnings is, I think, just like every important bank is reporting. Chase, Morgan Stanley, Wells Fargo, and I think one or two others. So a lot of, if you're in the financial sector, you follow any of those, this is an important week for you. And also retail. There's the retail numbers coming out. So if you were interested in the CPI last week, you want to be interested in the retail numbers this week. I think it might be Wednesday. We can look it up before our time is over here. But I was just explaining to the first couple people that came in is when I set up every morning, I'll open an advanced GEX page. Right? This is where it displays every expiration on the options table for the ticker you put in. We're going to talk about NVDA, just because it's like what we have been covering, so it's compare apples to apples. And I also have the SPY up on the quant charts to look at it. So let's start with the SPY, right? The SPY reached the sell zone last week, and you could say double touched, right? Or you could say it's a bull flag with an upward-facing flag. A bull pole with an upward-facing flag. Those tend to fall to the downside. If it had been a true flag, it would have fell down or consolidated down, used the 2-day VWAP for a chance to go higher. This, to me, reads bearish, but the market has shown time and time again that patterns can be broken before they can be 100% trusted, for sure. But we are looking at confluent data. And what is confluent? The definition is when two rivers come into one. And that's what we're going to try and find with data points. This data that we're looking at is the quantitative data. This is the cold, the hard, the math. This is unopinionated. This is not someone's inkling or gut feeling. And this has nothing to do with the options market. So it's not the sentiment of everyone else and their calls and puts. And it's definitely not my bias with all my lines and trends. And it's not yours, which is another great thing, because we all can get biased, right? If I think NVIDIA is going to 200, or more specifically 170, 180, that's a bias. I'm now on that train. So I'm kind of, by human instinct, just kind of looking for confirmation of that. When I look at the quant chart, it forces me to say, hey, listen, there's some math here that you can't ignore. This is last week's data, right? And we're going to load tonight's data before we go. I'm going to load it on TradingView. This is last week's data, but we're reaching the 2 sigma line. Now, the 2 sigma line operates like a bell curve, where about 92% of the action happens within 2 sigma. And we'll see if we can do this on cold meds. Not cold meds. Super industrial hospital pain meds. Let's make this a little bigger. So a bell curve, if you can imagine, looks something like this. Very something far from this. And you have the mean, right, the middle. And then you have 1 sigma away. And you have 2 sigma away. Similar on the other side. Pay no attention to the other side. But in here is 1 sigma. That's my number 1. That's 1 tonight, everybody. That's what it looks like. And this is 2 sigma. Don't even say it. Oh, perfect. So anything out of this area is very rare. So once we get into this territory, statistically, we like to think that it wants to come back to mean, to the middle, revert back to the mean. And that's what we're seeing when tickers touch the, on video, sorry. Tickers touch the 2 sigma line. There's a greater chance of coming back to the mean rather than breaking, going higher. Now, as that comes out of my mouth, we're talking about NVIDIA. And NVIDIA has been known to break 2 sigma time and time again because it's such a catalyst-driven stock. It's in the news very often. It's heavily traded. Elon Musk is an avid social media participator, right? So all these factors coming in. So this is a great example of when we can examine the data, but we can't ignore the news in this case. I always say you can trade without the news, but with NVIDIA, You kind of have to have your ear to the ground. Just anticipate things breaking. So instead of instead of expecting that we come down, we'll wait and see. We can wait and let the price action tell us. Now tomorrow, the intraday levels will be a little higher. I'm guessing like this will be the middle. We'll see. We can load it up and see. In fact, let's do that now. So those of you that have joined the gold side, you may have done this, you may have not, but start here, getting started guide. Brian set this up as a perfect checklist to go one by one. There's videos along the step of the way. There's graphs, there's charts. When you're ready, you can come down to Thinkorswim or TradingView. Click on the weekly and intraday code. And there's little how-tos here too, as well, I should say. So here's the weekly levels. They come out every Sunday at 5 o'clock. Tomorrow, we'll stop in after 8:30 and get the daily. So all we do is copy. Click once. It's copied. We pull up our TradingView. We're going to go open. New strat. New strat. Close that carefully. So what you do is you erase all the gunk, the basic code or the regular. We paste this on an open strategy page, and we're going to click Save, and it should populate automatically. QTA Weekly gives you the date. Perfect. Save it, and then add to chart. And then we have to change this to NVIDIA. And boom. So, the intraday I talked about, I apologize, I won't be out till tomorrow morning. I thank you guys for putting up with me. I'm still not 100%. I'm still recovering. I got released from the hospital Wednesday. I had to go back this weekend for complications. But anyway, we're going to open. Well, no, I don't know where we're going to open, but as we can see here, let's lower this. And let's get to the 15-minute. We kind of traded flat going into next week. Now, there's a couple theories that were talked about in a couple groups I'm in, is that NVIDIA is now attached to the financial sector, heavily invested all around. Institutions, banks, independent traders, hedge funds, everyone is on NVIDIA. So, with the based on the reports, or just more precisely, the market reaction of the bank's earnings this week could affect NVIDIA greatly. You know, because if the banks have a bad report or a bad reaction, it could affect their trading strategy, and NVIDIA most likely would be a part of that, right? Just an example of how things go. Everything's connected. It's all connected, man. It's all a circle, right? And those happen throughout the week. Like I said earlier, it's like Chase, Bank of America, Wells Fargo, and a couple other big guys. And retail also. The retail numbers come out. We'll check that. So this is how you load the script. And what you do is once, then you can pop on anything you want. Let's pick up the SPY and get what it's or a little wider. So they're expecting volatility again, probably because the banks are reporting this week, right? So even though we don't have a Fed head speech scheduled or an interest rate catalyst potential, even CPI, any type of reports, we still have volatility based on the earnings reports of the big banks. So keep that in mind. And also tomorrow, important. Tomorrow we can trade. The bond market is closed. We can trade, but it's not. The banks are closed. It's a bank holiday, which means any type of deposits, withdrawals, or settling, it's going to skip a day. So if you close something on Friday, it won't settle till Tuesday. Instead of settling on Monday, it will settle Tuesday. So think of tomorrow as a bank's closed holiday that you're able to trade on. Savvy? Savvy. So what we're looking here, right? We can't suggest one way or the other, right? SPY has continued to test a resistance, and finally we broke it. Are we going to come back and retest this area? I don't know. We tested it a couple times. There's no need to test it again. Or are we just going to continue higher, right? With the catalyst coming up, those are going to be important numbers. And the fact that we're at this midpoint, this doesn't really tell us much information. It's literally like a penalty kick in soccer, right? You'll have the guy lined up, the kicker, and the goalie in the goal, and he can go left, go right. It's a 50-50 shot, and we're just going to have to pick away. No, that's gambling. We can wait. And what we do is we wait till we hit a level. Tomorrow morning, we'll have the intraday levels. And if we get something like intraday, oops, it's been a while since I used TradingView, sorry. We get intraday levels like this, and we're opening close to the top intraday, the north intraday, or the top, whatever. We get a bounce here. The play could be down to the south one. We're going to then also incorporate the VWAP and the 2-day VWAP, which we see here. It's been riding that 2-day VWAP for the last 2 days, testing it and holding, testing it and holding. What we could see if we get that bounce to that intraday in that hypothetical situation, we get that bounce, you could either use that distance that it's created to either get a good bounce off the 2-day VWAP to break through, or use the momentum coming down to break through the 2-day VWAP. That would be the play. I would wait until we reach one level, right? I don't want to leave these here as like, those are my predictions. That was just hypothetical. We wait until one level is reached, watch the reaction at that level, and then act accordingly. If you're playing the weekly, you can use the intraday as an entry and then use the weekly as profit targets or exits, right? If we get in after that hypothetical top entry, we're following it down, our first profit target could be the south intraday, and our main profit target could be the buy zone, right? That's how you plan. Sorry, just punched the microphone by accident. That's how you plan your week. You can use the daily numbers for entries. And when I say daily numbers, I do mean you can pop on here to the feeds, and you can use the SPY 0 DTE for an entry on a weekly play, right? Even if you're doing 2 or 3 days swings or weekly swings, however you want to play it, you use these as an entry. You can pair them against the weekly and kind of hold them over each other as filters in your mind. And you just find levels that kind of match up. Now, these are all from Friday. These won't work for tomorrow. But live tomorrow, you'll see new information. And here's something I mentioned on the last broadcast that's interesting. So a lot of times, when you try to plot your day, you'll use the first GEX feed. And you'll have this information, and you say, okay, this looks very bullish. If we can start moving here, it looks like a nice pattern here. I'm going to wait until we get this, maybe the absolute GEX to hop in here. You have a plan of a day to anticipate things. But the first actual market data, meaning comes in after the market opens, is not the 931. You want to go the one that includes actual market time. So 931 includes 9:15 and 1 second to 9:29 and 59 seconds. The 9:45 is the one that has the true live market data. And you can see here it's a big difference. So even though we plotted a possible move here, we have new information from the live market. So in other words, use this, plot your day, but don't write everything down in stone. Compare that against the new market data. And if there's a catalyst that happens through the day, you can come back and follow this as an easy ticker tape, a tail of the tape, so to speak. You can see where the absolute GEX shifted. I think we had a shift. So pre-market, we were here at 575, and the first one after, it stayed at 575. I thought it shifted maybe later in the day. What's this one here? Here, 577. It shifted back up. And you just follow this along. I didn't want to get into exact details how to trade this, but simply enough, your put volume, your call volume, your GEX levels, your absolute GEX, your max pain. These are all levels that are explained in detail in where this getting started system is. What you want to look for is the high GEX areas, the absolute GEX levels. If those line up, that's a confluent level. The max pain along with that, you have triple confluence. Those are interesting levels when they all line up together. But this is also why I keep the advanced GEX open, because here you can actually toggle more data than what's just on the feed. Let's get rid of the 11th. So here we have, this is actual GEX data I'm expecting this to change at 9:31 in the morning. But I can still plot because this information was available last week and people traded accordingly, according to this data. So it's not like this is dead, you know, we'll just wait till 9:31, don't make any type of plans. This is still, you know, usable data because people were using it already. So let's just get a feel of where we were looking at. 140 seems to be pretty interesting. We have a pull at 138, the secondary high absolute GEX, and the highest GEX 140 with the highest absolute GEX. This is confluence. This is what we were just speaking of. It's two rivers coming into one, right? That's confluence. This is two pieces of data telling you the same thing. And we can go ahead and put on some, let's see, call volume. Oh, we have to kill. So here's another tip. If you're going to use any of these data points, close this one and then enact these. Call open interest, highest right there. Let's see where the call volume is. Call volume is also at 140. So 140 is a high magnet target. That's one way to anticipate where we're going. Now, I like to look at the immediate opposite way. Okay, what if I'm wrong? What if this call volume here acts like a resistance and we don't get to go through this valley to get to these high magnets? This is an also easy road to go. What if we go down? What did the put open interest say? Okay, what's the put volume say? Put volume is actually, we're below the put volume, so that, you know, it could draw us there, but that also acts like a piece of resistance. So 135, if we get over 135, 140 looks good. If not, a retrace to 130 is definitely possible. It doesn't look as attractive as these two huge GEX bars, but sometimes the way the stock moves would be touch 130, then to 140. And then if we pull up the tech, does that make sense? 130 to 135. Right, so 131 was support and 135 was resistance. We've danced here before, right? We broke 130, touched 135, came back, touched 130, up to 135. Do we go back down to 131? Or do we hold here as new support and go higher? This is what we're going to wait and see on Monday. So it's all just setting up possible trade ideas. It's not writing something down in stone and saying this is what we're going to do. If you're trading on swings, which is 2 or 3 days, we're trading 0 DTE, it's all about the immediate data that you have. You can plan and anticipate, but you have to be able to shuffle what you've created and have the least amount of bias attachment as possible. Does anybody have any questions? Is anyone already a gold member or thinking of a gold member that you had questions on a specific tool or function? We can definitely cover that. Excuse me, I'm still have a high fever and I'm reeling with this recovery from the hospital, but this is actually fun for me. So this really helps me take my mind off the pain. So it's not like I'm struggling to be here. I'm very thankful to be here. Right? So this is what we do. We set up a not so broad scope. You know, you could say, oh yeah, NVIDIA, we're going to go to 170. Perfect. That's our goal. All right, you can go 2 months out and get some options for 170 on NVIDIA and just wait and see. Or you can try and time your entry a little better and look at the local data. Same type of trade, same 2 or 3 months out, but finding a better entry. More importantly, finding support. We don't want to get into any type of call or any type of bullish trade until we know that the bearish side is the least popular. Meaning, if we find good support, then I'm looking higher, right? I'm not looking higher when we're testing the resistance. You know, if we hit that resistance a couple times, that 135, you know, we could call this once, twice, 3 times, break it. No, didn't break it. I'm not looking to catch the breakout. I'm looking to catch where we can't go down further, or we most likely won't go down further. And that's a heavy mistake that I made when first actively trading all day. And I see that same mistake happen again. People are waiting for the breakout to get in. But, what if this was a breakout? We broke out, we retested, and then failed, and now we're just at this again. So the safer bet is to catch it at support. And then if we don't break through, hey, you can get out with a small profit. 133 to 135 is good, or even 131 to 135. He plays the weekly, right? We come down, we test it, go back up. It's just something to think about as strategy-wise. And then always a macro view. I believe I drew this in some other lesson. We have a bit of a mashed up cup and handle here, right? We come down, make a little bit of a cup. Don't really quite reach that neckline, so I'm kind of feeling like trashing this. But it is a cup and handle in every sense of the world, except we didn't get to that resistance. Maybe this is the finish of the cup, and we're looking at another handle here. So if that were the case, we'd look for come down to 126 and hold to go higher. And again, just speculating, throwing those out there, and then seeing which path it takes. It's a lot easier to do that rather than starting on 9 a.m. and then saying, all right, we're testing resistance. If we break, we're in. Or if we get rejected, we go, no, actually, that would be good. If you get rejected at 135, you could play down to 131 or 133. Whatever your profit target is, whatever your pain tolerance is. But what you want to do is find the levels for the day, your range for the day. And once you find your range for the day, you can then incorporate the GEX. And the GEX will show you sentiment. So if we're right around here, there's more sentiment, or there's more high GEX pulling us up, breaking through 135, than there is pulling down. But you can make an argument that there's a little outlier here at this random GEX at 129. You can make this, and this is what happens. I get it into debates as if there's traders in my head with the exact opposite opinion of mine. And I think that's good. I'm not great. Maybe I am crazy, but that's what you need. You need to have the opposite opinion. So if you think, maybe I'm a little too biased on NVIDIA going to 170, where could it possibly go so I don't get caught with my hand in the cookie jar, so to speak? I mean, even if revisiting 122 makes sense, Just paint these out in your head. We're not going to go through every scenario. No, 126, that would be support. So yeah, the application of QTA can be used with tech analysis, and I think that's the point. This is not a strategy, or these aren't tools to replace everything that you've learned so far, but it's actually to enhance. So if I'm looking at levels, all right, 126, I have support. Does anything else tell me that? Go to the quant. Nothing on the quant level suggests 126, but it does suggest 125. So now I'll be out on the lookout for that. 135 has the intraday and the 2 sigma behind it, and 135 is our tech level here. So that's confluent. That's a stronger resistance than this is support, because it has data that's confluent. 130, okay, there you go. 130 is the top of the sell zone, and we touched on it when we broke it. We broke it and touched back on it. So that is confluence on the 130. Apologies, right there. So we could see a little bit of consolidation in NVIDIA. If you look at the RSI, you can make a case that it's coming down to reset with the price action staying the same in an effort to go higher, or it's signaling that it's going to retrace downward. We're still at the 58. We're still above that 50-50 mark. The MACD is still above the zero barrier in bullish territory. So it's not signaling that we're going to have a bearish week, but again, it's all going to depend on Monday. So if you're thinking about joining the gold side, you want to see what it's all about. It definitely takes more than a couple days to really get into it. It will take you a good amount of screen time, a couple weeks, and that's why we give you a month. The first month, there's a code DNOW30. It gives you 30% off your first month. So it comes out to $140. You get access to all these tools, and that's when you take the opportunity to really dive into it yourself. See how these will coincide with What's going on? Looks like nothing's going on. Oh, no. Oh, you guys don't see my screen? Oh, my goodness. All right. Well, I recorded this event, so I will post it in the room. I'm totally sorry about that, guys. But so I did want to finish with, there are a couple catalysts this week. They are not your normal catalysts, but if people are following CPI, you want to watch the retail. The banks are going to be the most important ones to watch because they're going to affect the major ones that we trade. The main ones that we trade in here, Apple, Amazon, Microsoft, NVDA, Meta, and Google, are the same ones that the banks trade. So keep that in mind, right? They might be adjusting their major positions based on their own financial situation. So I apologize, I'm not 100% today, but at least we got those few little things to watch out for this week up and on your radar. And again, make a plan, anticipate it, but always be ready to get that fresh market data, especially if you're trading intraday. You want the freshest data there is, and all you have to do is hit refresh here, and you get it. All right, guys, if there's any other questions, you can type them in chat right here. Or if you think of one afterwards, you can type it in public chat. And otherwise, it's always been a pleasure to do these. We're going to have some better ones during the week where we can actually go over the day's action. And that way there's something to talk about and lessons to be learned, as opposed to just, hey, look out this week for this, and we're going to look for this level on that. Right? I think it's much more, to Monday morning quarterback things, it's much more advantageous than to just speculate what tomorrow's going to bring. It actually teaches you how to look for the moves yourself if you're able to look at them happening in the past. All right, but I want to thank you guys, and thanks for coming, and I'll talk to you guys soon. I think the next one we might do like Tuesday night, one day this week. All right, thanks, guys.